If anybody would like to get an invite for future meetings, just shoot me an email, Steven, Steven, at collegerecruiter.com. We meet on the second Thursday of each month. There's no cost to join, participate, etc. And it is at from 11 a.m. until noon US Eastern. So depending on where else in the world you might be and whether it's daylight savings time or whatever, I'm going to let you figure that out. Sorry, there was just, okay. We are joined today by Andrew Flowers, who is the chief economist at Appcast. And Andrew was kind enough to agree to join us to talk about some research that Appcast has done that I think on the surface makes absolutely no sense whatsoever. Andrew is going to explain to us how, in fact, it does make sense, and I'm just an idiot. I will stop sharing my screen here with the cover art. Andrew, maybe we can start off by having you kind of like introduce yourself for the folks who perhaps are new to the industry or in markets where Appcast is growing into. Maybe also tell them a little bit about what Appcast does, how job boards work with it.
Yeah, happy to. And really just thank you, Stephen, for inviting me. And I see some familiar faces, some new folks. I'm excited to be here. I do have some kind of simple material prepared. I think, for maybe 10 minutes max. Like, this is not a lecture. I thought I'd just introduce myself in Appcast for a second, and then just show you some basic data to kind of ground our conversation about what is, I'll tell you before I share my slides, a kind of counterintuitive finding. Per Stephen's point, it kind of doesn't make sense on the surface of it. So the core counterintuitive finding is...
Well, before we do that, so tell people a little bit about your background.
Sure.
Then also tell us, for those of us who aren't all that familiar with Appcast, what Appcast does.
Okay, great.
Because otherwise, Matt Molinari will be very upset with both of us for missing on this pitch opportunity.
Okay, great. I'm going
to see him next month, so I'll tell him, Andrew. So.
Okay, gotcha. Yeah, I'm definitely not a salesperson, so that's on me. First, I'll introduce myself and tell you about Appcast then.
Cool.
So, does everyone see this slide here?
Yes, thank you.
Okay, great. One second. So this is me. I'm the chief economist at Appcast. I've been with Appcast for about 4.5 years. I lead our data team that does both customer and product analytics. I used to be an economist for Indeed, on the Indeed hiring lab team. So very familiar with kind of job board data, both from Indeed, but now through Appcast with our partners with, thousands and thousands of job sites. Very familiar with the kind of back-end architecture of job boards, but also recruitment marketing metrics that, talent acquisition teams care about. So that's me. Used to work at the Fed, 538. I live in the Boston area. That's where I'm joining you all. And so that's me and my background. Appcast. So Appcast has been around for about 12 years. We were founded in 2014. We are over 400 people in 12 locations. And what do we do? I would say we're the leading recruitment marketing platform in the world. We're the largest buyer of job ads on Indeed, on ZipRecruiter, on LinkedIn. In aggregate, we have 1,000+ clients, whether they're agencies and other job boards in our kind of wholesale side of our business, but mostly direct employers, right? Who are using our technology to distribute their open jobs across many job boards programmatically, as the saying goes. So we're a programmatic shop, but we've acquired Bayard Advertising 3 years ago to really expand our products beyond just programmatic job board channels to search and display ads, to brand awareness ads on TikTok and Instagram, to building career sites. So some would consider us like, oh, a recruitment marketing agency. And that's not incorrect, but I think we were really founded as a kind of technology platform that would power recruitment marketing agencies, and then kind of grew beyond that to become one ourselves. So that's the story of Appcast, and that's my intro. Does that sound good, Stephen? And should I dive into the narrative?
Yeah, that's awesome. And I think the only other thing that I would add is for those on the call in parts of Europe, Asia, Africa, whatever, Appcast, I think, Andrew, it's fair to say, has a much bigger footprint in, say, the US, Canada, UK, much of the EU, and other countries. So, you know, if you're connecting from Nigeria, Appcast may not have much of a presence there, but I would put yet for that. But yeah, I think it would be great, Andrew, to sort of dive into the research, and you know, if anybody has any, you know, questions, thoughts, whatever, we're probably about 15 minutes away from getting very interactive with people sharing what they're seeing, asking questions, whatever. But Andrew, yeah, fire away, please.
So I thought I'd just structure this really simply. This is not, you know, Jerry and others have seen me present, and this is not a 45-minute, much less a even 20-minute kind of walkthrough of data. This is a very succinct 1-2. The one is to just give you some context about the U.S. labor market last year. Yes, this is a bit U.S. focused for this presentation, but I think it has some resonance beyond the U.S. And to Stephen's point that he just made now, Appcast was acquired by the Stepstone Group in 2019. So our parent company, the largest job board in Germany, has a big presence in EMEA. And so you're right, Stephen, our presence is mostly focused on North America and EMEA. But we hope to do more globally. So with that said, that's our kind of global caveat. The data I'm about to show you and the data behind this report that kind of generated some of the counterintuitive findings that we're going to talk about is US focused. So I think just for 2 minutes, let me give you a little context with the US, and then we can dive into the actual recruitment marketing data and then give you the kind of so what. So this is what's interesting is hiring declined, the labor market softened in 2025. So last year, the labor market became more favorable for employers. And what does that mean? And so one single chart data series to kind of encapsulate that is, let's look at US job openings as a ratio to unemployed people, right? So like if it's this horizontal bar one, this line at 1, that's like an equal number of job openings to unemployed people. And these are people who are without a job but also actively searching for work in the last 4 weeks. And so when this ratio is at 1, it's perfectly balanced. Well, just a few years ago, as you see, it was 2 to 1, meaning that like there were 2 job openings for every 1 unemployed worker. It was very hard to hire. Job boards were kind of booming, lots of postings, lots of job openings, driving labor demand. Well, we've cooled substantially since then. As you see now, this ratio is at 0.909. So what does that mean? It means that for every 1,000 unemployed people in the US, there's only 909 job openings. All right. So you see the story here is that it's cooled substantially, but we're nowhere near a kind of recessionary level, as you would see in these kind of shaded areas where the ratio is far, far lower. Okay. So that's the kind of high level takeaway. The data I use, I'm biased. I just want to be clear. I'm sorry. I used to work at Indeed, so I'm familiar with this data set. Not saying that Indeed is the end all be all by any means, but for this audience, it just as a kind of proxy in the US, when I look at job postings on Indeed over time, you see that they've declined. When I index this data here to 100 in January of 2024, over the past 2 years and change, it's declined by 16%. So it's gone from 100 to 84. That's the black line here for total job postings on Indeed.
Let me interrupt you for a second, if I might, because this is something that I think is really hard to measure. And I think we should just be, so there's a huge difference, I think, between the number of job postings that are activated, because a posting can run for an hour, versus the number of postings that a site has at any given time, which is more of an average. When you're pulling this data, how are you counting how many postings? Is activated average? Where's that number?
Yeah, so what it's doing is on a daily basis, it's deduplicating job postings, so excluding expansions and kind of title and geography changes to kind of getting a fingerprint of a unique job posting. And once that's deduplicated, it's aggregating by day the job postings that were, whether or not they're sponsored, just that they were actually posted on the Indeed platform on that day. And then this line is just smoothing that over time.
Cool. Thank you.
Yep.
Do you guys happen to are these these aren't evergreens or any these are real jobs, right?
Yes. Yeah. These are
Okay.
These are real postings. Yep.
Okay.
Do
you calculate a real posting by any other measure, like how long it's up or anything like that?
I'm sorry, what do you mean by how long it's up?
Jason, do you mean if it's been running for more than say 30 days that you do not consider
a day,
day 31 on as a posting or as a new posting?
Yeah, it doesn't go up and comes down, right, within a minute.
Yeah, if a job has been retracted, it will be removed from the data set. And yes, there are kind of stale rules that kind of remove postings that have been up for a long time. So yeah, there are some timing rules that Indeed implements for sure, as other job, as this audience here can attest. I'm just using this one example from Indeed to make the broader point is whether it's Indeed data or whether it's this data I just showed you on job openings, which comes from the Bureau of Labor Statistics, which is a survey-based measure to just actually call businesses every month in mass, millions of businesses, and say, well, how many job openings do you have? Whether or not you're posting for it, how many people are you trying to hire, right? And so I guess the broader point is whether it's job openings, whether it's job postings on job boards, or whether it's actual hiring, the labor market has declined. All those measures by many different sources, we know that in 2025 compared to 2024, there were fewer job openings, fewer job postings, and the growth rate of employment was slower. We didn't see a big decline in employment. Actually, we added jobs as an economy in 2025, but the rate of growth slowed. So what this is building up to, and here again is just basic metrics on the labor market where the unemployment rate, ticked up a bit. It's still historically low. That's my point here of this is that 4.3%. When you zoom out from the past 80 years, it's not like there was a big uptick in layoffs. And actually, I can show you here. This is actually the main chart before I tell you the kind of job board metrics on clicks and applies in just a second. This is my last kind of labor market point here is that these are three different metrics of the labor market in the US. The top one is showing you hires. So the hire rate here is just it's the number of hires as a percentage of total employment. It declined substantially over the past 3 or 4 years. You see now it's at 3.3% basically, right? The orange line. That's the lowest hire rate in over a decade. So however you slice it, employers in the US are hiring at a very slow rate compared to where they were 2, 3, 4 years ago, post-pandemic. But it's not, and what's happened is, it's not like there's a recession.
Is it a slow rate? Or it doesn't seem like a slow rate. It seems like a non-existent.
Yeah, well, here's how I would think about it is at 3.3%, that's a slow rate, slowest it's been in a decade. But when you look at a deep recession, say, look at your eyes over here to the left around 2008, 2009.
2008, yeah.
That's more significant. And I guess the thing is what causes weakness in the job market from a job seeker perspective? Is it just that employers are not hiring, which is kind of the case now? Or is it that no, employers are also firing? But what we have now is we have a low hire and low fire economy.
Yeah.
Because look at this layoff rate. It's still below the benchmark pre-COVID. It's still a very low layoff rate. You see here, this purple line, during the Great Recession back in 2008, 2009, layoffs spiked. We have not seen a big spike in layoffs. It's just slow hiring. Does that make sense?
Mm-hmm. Yeah, I think it's interesting too, just kind of like going back to that hire rate that you were pointing out, like 2000, starting kind of 2008, 2009, just how long it took for us to get back to kind of a parity setting. It looks like it's like 2018. And my memory was more like 2013, but maybe by 2013 it was on the upswing, it was getting better, so it felt good, but it wasn't really good until like 2018.
Yes, and I think, good here is relative. These dashed lines here are just the kind of 2019 pre-COVID benchmark. It's kind of like up until February 2020. It's like, well, where was the hire rate? Where was the quits rate? Where was the layoff rate? And I guess the point of this is just that it's a low hire, low fire economy. From the job seeker's perspective, it's hard to get a job because employers are not hiring that much. But if you have a job, it's not like it's a deep recession where you're fearful of a huge increase in layoffs. So,
do you have any days to hire data?
Yes. Not for this quick presentation, okay, but we have lots of metrics.
No worries.
That's a great question. No, I can follow up with that. So, long story short, that's the context. Like, that's the background to this report that I've talked about with some of you, but I just want to I'm not going to give you the whole detail of the report. We've been publishing this for 10 years. This is our 10th annual recruitment marketing benchmark report. And just like, basically, here's the trajectory of how our data set has grown. So now we have 300 million clicks. We have 27 million applies in the most recent 2026 report. We also track and normalize all our data down funnel. So we track those 300 million clicks down to those 27 million applies, on down to the screen, the interview, the offer, and the hire stage. And then on the left here, you see some basic cost pers. Cost per click, 83 cents. Cost per apply, 19.20. And then on the right, the kind of conversion rates, the percentages of going from, say, click to apply is at 4.66%. So that's all in the report. And I'm not going to sell you more on the report. I can share that PDF directly with you all after this meeting. But here's the key drum roll point, is that last year in 2025, despite that slow hiring that I just walked you through about the labor market being slow, despite that slow hiring, all these recruitment marketing metrics rose. Things got more expensive. Why is that? That's the head scratcher that Stephen was talking about, which is like, wait a second, you're telling me job postings declined, employment, the hire rate of employers went down, but yet the cost per click for bidding on job boards, you're telling me it went up by 22%. This is what we're showing you here on the cost per click basis. The shaded area here is just 2025, right? So January to December 2025, and you see it basically rose from 75 cents to like 95 cents. Okay, well, what's behind that? And so here's the key explanation. It's a composition effect. The composition of roles that were sponsored, that the reason the bids on those clicks rose is that spend concentrated into occupations that are hard to fill. So like healthcare. Naturally, like healthcare, for example.
It was healthcare, right?
Yes, 95% of the job.
I actually read the report, Jerry. You'd be proud of it.
Exactly. So I'll stop sharing now because I think you guys kind of get the gist. The story here is like conversion went up by job seekers, partly because of AI, partly because, the labor market weakened, but the cost went up. And why is that? Even though recruitment marketing budgets were being trimmed because hiring overall was tightening up, the amount of money you had to spend was concentrated in those hard to fill roles. Whereas through organic channels, you didn't need to pay to sponsor jobs through a lot of your occupations that were easy to fill outside of, say, like healthcare, HVAC technicians, other hard to fill kind of science and engineering, AI related roles. Those are the ones that grouped a lot of the spend. So here's my last chart. It's just healthcare CPAs keep rising. They're at $35 an application. Whereas some of these other occupational groups, it just declined in 2025. And so bottom line is for you all, I'm going to skip to what does this mean for job boards? And this is my last slide, and we'll have a conversation, which is like the job board game, according to this data, is like, it's not, at least in 2025 and 2026, it's not so much a scale game that ensures pricing power. It's not so much volume, right? It seems much more about scarcity of the specific roles, right? And differentiating that pricing by the type of role really matters. So healthcare roles are commanding that higher pricing. The other, hard to fill roles I can walk you through. Whereas the organic channels are really absorbing the easy to fill roles, because there's just a lot of job seekers who are using AI tools to just apply to all these kind of easy to fill jobs in mass. And so a lot of employers from our perspective are saying, wait a second, I don't need to sponsor jobs for like my accounting job, my marketing job, my sales job, my software developer job. These kind of like white collar sitting down jobs where I'm getting 500, 1,000 applications. Some of them are driven by AI tools where the job seekers are just almost spamming us. Why would I pay for anything for those? I'll just use organic channels. So long story short, the strategic question is no longer whether pricing power exists. It definitely exists. It's just how it's selectively applied and defended on those those hard to hire for roles. So with that, let's just open it up. I hope that was a good kind of starter there, Stephen.
Yeah, that's awesome. If I was just sort of looking at that bar chart that you shared a minute ago, Andrew, where healthcare was like far and above the biggest, and it looked like there were a couple of others as well. One was, I think, engineering, and there was a third one.
Probably AI.
Was one towards the left, and there was one towards the right.
Yeah. Is this the chart that you're talking about?
That's it. Yeah. So like the 1, 2, 3, I think that's 6th column over. Is that? It's just hard to read like the header.
Yeah. Sorry. It's basically education, healthcare.
Okay. So
science.
Education meaning teachers, administrators.
Yes.
Okay. And then pretty far over to the right, yeah, there's the science and engineering one, which I think that probably includes what Jason was referring to with AI developers and others in that world. But pretty much everything else was more or less the same. Those seem like 3 outliers.
Yes, like and you'll notice with education, healthcare in particular, what we find is these non-automatable, at least not yet, at least in 2026, roles where you have in-person service delivery. When we talk about service jobs, we think of like, retail, food, cooks. But actually, when we talk about like non-white collar, non-sitting down jobs where you're providing a direct service, you're a teacher, you're a physical therapist, you're a home healthcare aide. Those are the jobs that stood out in terms of direct care service. The science and engineering jobs, a lot of this we find is related to the broader AI boom, right? So data scientists, machine learning engineers, AI talent that is kind of building these systems is itself hard to hire for.
That makes a ton of sense. Ben Groves asked a great question. Ben, if it's okay with you, I'll just kind of read it. Is there any chance to show the bar chart broken by occupational group as year-over-year change, or have the CPC, CPA stayed stable within each industry? And I think you were kind of talking to this a bit, but do you have a chart, or can you kind of talk about the changes? Like, has healthcare gone way up, and have some of the others gone way down from 2024 to 2025?
Yeah, I don't have a chart. Actually, I can do this live, like the whole Bill O'Reilly. Let's do it live. I'll just like dive in and try to show you the data right now. But I don't have it for this presentation, but when we look at year-over-year changes in CPCs or in conversion rates, what drives this higher apply cost, right? It's a different story depending on the role. So what we find is some of the roles, the reason that the CPAs decline, so year over year, some of these white collar roles, CPAs decline. Finance, sales, software development, so on. But a lot of it was driven because of it's not that the bidding changed and that like the bidding declined. In some cases, the bidding even increased a little bit. It was just that there was such an avalanche of new people applying that the conversion rates expanded so much so that the CPAs declined. Versus other roles, the reasons that they declined is actually the basic demand weakened, and that like just the actual bidding decline. So I don't have those charts at the ready. I could try to pull them live, and I may even do that right now. But does that answer your question?
Yeah, Ben, is that what you were looking for? Are you?
Ben's a mime.
Yeah, I mean, Ben, you've been
I
most of
want to
this.
see the live action shot, Andrew. I want to see the
All right,
sweats as
let's
the
do
charts
it.
loaded.
Let's do it
I love
live.
the reference. I'm more interested in Q1 than I am the past data, but
Does everyone see this?
yes.
So
There we go. Yeah.
Okay, so this is kind of the job seeker story, right? Is that like this? I think perfectly tells the job seeker story. This is 2024 to 2025 in terms of the job seeker change in their conversion. What are the jobs that top the list here that have the biggest jump in the number of people who are applying for them? Tell me if you see any common theme: legal, technology, finance, consulting. All right, manufacturing seems a little out there. Business and consumer services, healthcare, and human resources. Okay, the common theme in all these, in my opinion, outside of manufacturing, is and manufacturing has tariff-related effects. Is there white collar-related roles? These are job seekers who are fearful, who maybe got laid off, or who are fearful of their job security, and they're using AI tools en masse. And so we see a huge increase. What are the bottom roles at the bottom of this list where conversion declined? Well, healthcare, that's a pretty common story. The labor market's super tight. Like you're unlikely to be unemployed or not well compensated in healthcare. Hospitality, interesting. Hospitality, another one where it's actually hard to get some talent. Transportation, education. So in some sense, like this tells the job seeker story, right?
These are all economies of scale, right? If people don't, if they're out of work, then they're not going to go spend money at a restaurant, right? Do you foresee the healthcare? So with this big beautiful bill, right, that's impacted a lot of people lost insurance. Do you foresee the healthcare number spiking, changing at all?
That's a great question. So you're right. The one big beautiful bill last summer that was signed by the president, passed by Congress, it had $1 trillion with a T of Medicaid cuts baked in over the next decade. Now, some of these don't really take effect until after the midterm elections, but when we look at the outlook for healthcare, yes, I think for some of these clinical roles, the hiring will probably slow down starting next year. It's not going to cause like a healthcare, even though that $1 trillion sounds like a lot of money, it's spread out over a long time, and the basic aging of the population and the demand for healthcare services tells us that like there will still be hiring for clinical roles, but yes, the healthcare growth rate will slow starting next year. But there's also going to be some uptick in hiring in non-clinical roles, some kind of social worker, administrative roles. Frankly, there's a lot of compliance and paperwork requirements around, like demonstrating effort to find work and so on that. For the healthcare practices that do accept Medicaid, which is increasingly smaller and smaller, their hiring may move to just getting people to have that health insurance to begin with, if that makes sense.
Thank you.
Yeah, Andrew, this is awesome, and at least for me, and hopefully for most of the other people on the call, that I think the slides were great. You when you started off, you sort of prefaced it by saying, sorry, this is US data, kind of thing. A lot of people on this call are from the UK, EU, elsewhere. Is this consistent? Is Appcast seeing consistent numbers in other areas of the world? Or is this really a US story and the rest of the world looks really different?
So such a good way to tee this up. And I'm going to do another live thing here because I have my dashboard, my team built. So does everyone see this? So this is one of the cool things in our report this year is we expanded to over 15 countries. Our coverage, again, full disclosure, most of this, as you can see, is in Europe and North America. But we have Canada, Mexico, we have major European countries. And so what we're showing here is the CPAs by country in 2024 versus 2025. Now, the Netherlands is weird. I just want to start. Nothing against our Dutch friends. this is part of a data set. We actually dropped this from our final report just because the Netherlands data set was just strange. So I don't know if I totally trust that big increase in the CPA in the Netherlands, but we do a lot of business in Germany. Our parent company is in Germany. Same for all the DACH region, the kind of Austria. We have a lot of business. We have we have a huge operation in Poland. So those are deeper data sets, bigger sample sizes. And what we find is all those had big declines. And if I can scroll down a little bit, you even see the United Kingdom holding steady, right? Which is interesting. And so long story short, our US data here, I wouldn't trust because this is all through Stepstone, our parent company, and how we are trying to bring programmatic or pay for performance job board pricing to some of these markets that didn't have it necessarily before, where it was maybe the tradition was more duration-based postings and pricing. So does that answer your question? For the most part?
Is this from Stepstone or is this from Appcast?
So this is Appcast data and Appcast technology in terms of the pay for performance job board pricing. But it's administered, it's sold, and the account teams who administer it are through Stepstone. So our parent company is the company that goes to those employers and says,
thank you.
Yeah, it's really interesting to me as I'm kind of scanning through this to see, I don't know, roughly half of these countries did not change that much, maybe a third, or 2/3. They changed a lot, but some of them the prices went way up, and some of them the prices went way down. I mean, it doesn't seem to be like a universal. This is the story is very much the same in almost all countries. I think the story is actually very different in most countries.
I think that's right. So again, one piece of context that's missing from this is just how big the coverage is in each of these countries. So like I know intuitively, like the Germany, Austria, Poland numbers are much more trustworthy because we have a lot bigger, the amount of clicks and applies and job board connections is much greater than in, say, Spain. So like Spain, I don't know if I fully believe.
Yeah, but your data is also with Stepstone, who's based in Germany.
Yeah.
So.
Yeah. And so we had to have minimum sample sizes in terms of number of employers, number of clicks, number of applies to even show up here. But even that said, so take, for example, France and Spain. I know from our macroeconomic research that there's actually a bit of a resurgence in more of the Southern European countries in terms of tighter labor markets, higher demand for workers compared to Germany and the UK, compared to some other, more of the countries historically that we thought were driving the economic growth of the European region. It's actually now the case that actually even Italy, even Spain, even France are doing really well in terms of their economic growth. So like the France number, I actually kind of trust. I actually think the labor market is tightening in some of these countries in Southern Europe.
And just to make sure that I understand, I think what you're saying in terms of like the data set in some of these countries is, if Stepstone itself, the job board side of the business, does not have a large presence, or it does, but it does, including through Appcast, very little business with other job boards. You're just not going to have that much data, right? Like in a country like Spain, where there's very little pay for performance, there's very little programmatic, you simply don't have access to a lot of that data. If the job boards there are almost all duration based, not partnering with you, you're just not going to have those insights to the same extent as you might in, say, the UK.
You said it better than I could, Stephen. That's exactly right.
Hey, that's why I get paid the big bucks. We've got just about 25 minutes left before the top of the hour, which I'm happy with because I think it gives us all a good chance to kind of share what we're seeing, ask questions, what doesn't make sense. So please, anybody chime in.
I'll chime in.
I love the data. Yeah, I think it's really interesting. One thing that you did not mention, Andrew, because you're talking about roles and geography, but I'm thinking in terms of the background of the candidates, and when we're talking about early career, for example, it seems to me that the slowdown in hiring is even more extreme within that group.
Yes.
And I think you were showing at one point, I saw some data relative to that. And I'm curious in terms of the rationale for that. If it's because obviously the claims are often AI and automation being the key issue here, which I think is starting to get crazy because I'm starting to interview at various colleges about what they're doing in terms of reinventing or reimagining their education using AI. And it seems to me that when the class of 26 or 27 starts graduating, we could see an extraordinary shift if companies are hiring early career, not so much for the role as an engineer or an accountant or whatever, but for their capability of fully embracing and being more native toward AI than their population. So I'm fascinated by this particular issue, and I'm really curious what you, Andrew, and Stephen might think about that.
And just to piggyback on that, Jerry, can you answer that globally?
I cannot at this point.
No.
My hypothesis is.
Yeah.
Oh, yeah. In terms of the slowdown in hiring being more slow, if you will, for the category of early career.
I just met with the president of a college about this exact same question.
And what did they say?
They wanted to know my opinion.
What I'm seeing is just a small sample of colleges that are fully embracing a pivot. They're transforming. And other colleges that fundamentally they don't get it, or they don't have the resources, or what have you. And I would consider them vulnerable over the next couple of years. Why would somebody go to that college?
Yeah. Andrew, do you want to give your two thoughts?
Yeah, so
and then I can share what we're seeing at College Recruiter, because I think Jerry's touching on early career. Like if Jerry was asking about experienced financial analysts, I'd be like, not my lane. Fire away, right, Andrew.
Go first, Stephen.
Okay. Well, the conversations that I've had with employers, advertising agencies, etc., is I would say long term they're saying the right things. In terms of like, we expect to hire a lot of these mostly young adults. In the short term, I'm seeing very little real action in terms of actually hiring those. That said, I think Andrew touched on this early on, and I don't think you used the expression "the great hug," but I keep seeing that in the media in terms of people hugging onto their jobs. They're not being laid off. They're not quitting. There's just very little turnover, and that, from when the conversations that I've had with employers, that explains a lot more of the difficulty in candidates early in their careers getting hired than AI does.
Interesting.
That the news stories tend to focus on AI. Some San Francisco, tech oligarch will just say, I'm going to let go of 40% of my company because of AI. It's like, well, why didn't you do that 2 years ago? And there's not a good explanation for that. Maybe there's some truth to it, but I think on the ground, I just think that there's just not as many openings.
So the college here is in Charleston. It's a Baptist college. It's a smaller school, right? 4,000 students. The areas that are excelling are healthcare, right? But the president shared with me that the schools that don't have the endowment and don't have the cash, a lot of the independent schools are going out of business, literally going out of business.
Yeah. And it's not just the smaller for-profit schools that were sort of put out of business because of a lot of student loan fraud that they were committing years ago, but it is definitely in some of the smaller regional schools, funding is tighter, et cetera. Andrew, I'd be remiss not to circle back and see, is Appcast have any data theories about early career hiring? Is it harder than it has been? Why?
Yeah, so I think this is a really nuanced problem, and so I think there's kind of 4 points I want to make to kind of give you the full texture of it from my perspective. Number one, whether it's early career hiring, college recruiting, or actually just the broader labor market, I think we've over-attributed AI as having a bigger effect than it has, when the kind of boring answer of high interest rates have crippled hiring demand far more than AI has. And so I think to the extent that people suffer when hiring declines, young people suffer more. And so as hiring, as I just showed you, has declined to the lowest rate in over a decade, the young people will suffer disproportionately. And so that's point number one, is that but what's driving that is more the macro economy, but it's not that AI doesn't have an impact, right? I don't want, and so I'm stepping on my next 3 points. So the first point is it's mostly macroeconomic driven. Second point is your point, Stephen, about the pipeline in terms of people aren't quitting. And so you said, great hug, or job hugging is the term. Well, one of the things I glossed over in this chart here is that the quits rate, this kind of dark blue line in the middle, is very low. And so people aren't quitting jobs. And so some of that is like mid-career, more senior people. And so I do think the second point of maybe it's a pipeline issue that millennials and Gen Z and boomers are kind of hanging onto their jobs and there's not much dynamism. And that's kind of preventing Gen Z, young college grads, from getting a foothold. I think that's the second point. So I think there's I think it's like 50% high interest rates and a slowing macro environment. It's 20% this kind of great stay of people just staying in their jobs, not quitting, what you said, Stephen. And then I do think there's a third point, which is AI does have some impact. And this is what I think Jerry was saying. When I look at some research from the Stanford Digital Economy Lab, again, this is the point that AI does have an impact. I don't think it's the main driver, but when we look at this vertical line here in October 2022, the month before ChatGPT was introduced, what this analysis from the Stanford Digital Economy Lab did was that they looked at headcount. This is using ADP payroll data, and they looked at headcount for all types of workers, but here we're looking at early career people, 22 to 25, and we're saying, well, how did the headcount at these companies under ADP's data change in the years since ChatGPT was introduced? And what they found was, okay, basically these young folks that were in more highly exposed, or the darker lines here, the highly exposed occupations like finance, like software development, like sales, like those young people couldn't get jobs. So we told people for decades, go to college, study a job to get like a desktop, knowledge work, a job. And they did, and then they're struggling now. And so I think there's some truth to that that's maybe driven by AI. But the fourth point, so point one, it's mostly interest rates. Point two, people aren't quitting. And so the great stay is affecting young people. Point three, AI probably has some impact here, given this analysis. It's not the main story, but it's some impact. But the fourth point I want to make around young people, and this is the key point, and it's also evident in this chart, is it depends on your job, because it's never been a better time to be an HVAC technician, an electrician, a plumber. I have 6 cousins, big family in Tulsa, Oklahoma. None of them went to college. They all went into the trades. They're all making six figures.
We're seeing that a lot, right? PE is putting a lot of money into that.
And so these faint lines, look at the top. Look at the booming headcount of young people in jobs that aren't exposed to AI. Well, what are the jobs that aren't exposed to AI? Physical therapy, being a teacher, any of the trades, skilled trades I mentioned. So the fourth point is it depends on the job. For the classical, like, I'm a college grad, I studied business, I studied marketing, I want to get like a corporate job. That's a struggle. That's a struggling market right now.
Hey, can you add a date? Can you put this as a tickler? I'm interested in what the boomerang rate is for AI, right? So when you have Mark Baranoff saying, yeah, we laid off everybody at Salesforce and now they're hiring everybody back, right? So I'm talking future data, Andrew. That would be interesting to see, right? Oracle just laid off 30,000 people, right? Like, but what we're seeing is there's a discrepancy between marketing, right, and real data.
Yeah, I'm glad that you raised that point, Jason. I was thinking somewhat along the same lines, that I think we've all seen story after story after story of big layoffs being blamed on AI. And what you don't often see is those same companies 6 or 12 months later hiring back similar numbers, sometimes the same people, into similar or even the same roles. And there's a very big difference between a leader saying we should be using AI is going to save us a lot of money, the stock price is going to go up, and therefore my options are going to be worth $20 million instead of 2, and I'm retiring in 8 months anyway, so what do I care what happens 2 years from now? That does explain, I think, some of these stories, like Box, I think is what was the company, the payment systems, Klarna, was it?
Yeah, they built their own HRIS.
Yeah, where basically they said, we have no employees, all of our employees are AI, and it turns out all they did was that they outsourced all of those same positions to humans. Instead of those people being in, I think, Sweden or someplace in Scandinavia, they were in India. And now they're hiring those same people back because, lo and behold, the AI actually couldn't do all the work that those people. But I think Andrew's point, and it is, and I would certainly agree with that. I think probably most of us would. It's not that AI isn't having an impact. It is. It's just not 90% of the reason. Ben asked another great question a few minutes ago. Do you see a question for Andrew? Do you see spend moving away from job boards to other sources? And he gives some examples: social, display, etc. And if you do, what are the ones picking up the volume?
That's a great question. I think I don't want to answer definitively because I don't have a confident answer, but there's two.
So the answer is 47.3%.
I can answer that. I can answer that. So we just signed 2 job boards in the past month. We do true programmatic, whereas Appcast is doing job distribution with programmatic. We do true brand programmatic. We just got 2 job boards last month. We took the one job board that had 2 million jobs that killed their arbitrage model, and they're going to display pay-per-click and filling that. One of the reasons why we picked up one of the largest job boards in healthcare is because of AI, the arbitrage model, the applicant flow, and the fact that Google search just dropped by 30%. And so, yeah, and then we're bringing on, we expect 3 ad agencies this month, along with, and we haven't even gone, our GTM hasn't been direct to customer. So
Andrew, do you have visibility into not just the job posting business in terms of like prices, bids, et cetera, but also on the display side? I think this is probably an area that Appcast has a lot better data on since the acquisition of Bayard.
Yes,
That's
in
Stephen,
the
it's the
benchmark.
AR thing that got me thinking, because I can remember a presentation that was given shortly after where it's like, and this will give us visibility of the whole ecosystem.
Yeah, we have a pretty thriving business in search and display and social recruitment marketing. And what I'll say there is the competitors to job boards are twofold. On the one hand, they're these search and social channels that Ben was asking about. I don't think that's like a existential competitor, to be honest. I think it's a competitor for niche roles where the talent pool's already highly employed, so they're passive candidates, or for younger, to speak of our last topic, Gen Z workers. That what I don't want to speak confidently. What I was saying at the beginning of responding to Stephen is we're doing a project right now when we're trying to track actual source codes for younger applicants and see whether they disproportionately come from Instagram, TikTok, any of the kind of like, stereotypical channels that you think, oh, well, a young person's probably not going to a job board. Maybe they're just like looking at Instagram. But if you run an ad on Instagram, let's see if they actually convert and apply. And so that's a hypothesis. I don't want to say that that's definitely happening. We're doing a study right now en masse with the Gen Z influencer to track those source codes for younger workers and see if they're actually just finding work through non-job board means. And so that's one competitor to Ben's point. I don't think it's existential though, ever. Just because when you look at the conversion rates, job boards just have a much higher intent audience. It's just a different, they're not competition so much as they're complements. But the second channel through which traffic could go is the obvious one that I think is existential to job boards, which is LLMs. And so for large language models and people's job search actually moving to Claude or Gemini or ChatGPT, yeah. There's been some job board integrations where ZipRecruiter, Indeed are building these kind of little at Indeed, at ZipRecruiter tools. I don't think that's actually where Anthropic and OpenAI want that to land in the future. They want to own that channel of acquisition of job seekers. But for that to work, there has to be some kind of to get technical for a second, this idea of an MCP, a model context protocol, which is like an exchange. There needs to be some kind of exchange where, just as you would through the programmatic XML feeds where you can kind of distribute to job boards, there needs to be some way to talk to, through an MCP layer, all the large language models, at least the big three, and maybe the other open source Chinese ones, where if you're a job seeker and you go to these LLMs and you ask for open jobs, is that inventory comparable across the different LLMs? We're in the very, 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 very early stages of this. It's the Wild West. I don't think in 2026 LLMs are an existential competitor to job boards. I do not think that. But in 2030, I don't know. Things are moving fast. Things could change a lot.
Well, it's exactly what happened in the DSP market, right? And the true programmatic DSP market, right? Where you had all these fractured publishers, and then you have big players now.
Yeah. Bill Fisher from Vaunt posted a comment saying that he used to think that it'd be bots talking to bots, but now he thinks it'll be something more like Claw talking to Claw. And I think that I saw Tom Chevalier on the call as well, and his company Tink is basically building a marketplace for agents to talk to agents. Agents owned or controlled by the job seekers to talk to agents owned or controlled by the employers. So Andrew, I think he's kind of like thinking along the same lines as you, that there is going to need to be the ability for the agents to connect with each other, to communicate with each other in a better way, where right now it seems like it's a lot of a very, very small percentage of candidates who are making a lot of noise about their agents. I see a lot more of the agents actually making an impact that are controlled by the employers or on their behalf. Where they're out there finding the candidates. The ones from the candidates finding the employers, there are some good tools out there, but I just think it's a tiny, tiny, tiny percentage. But yeah, I mean, if Claude, if Gemini, tomorrow or 3 years from now were to release a tool that a job seeker could go there and search jobs just as easily as they could on an Indeed, I think you're going to see some big success, where right now it is really clumsy. If anybody wants to see, just like go to ChatGPT and try to search, you're going to see listings, but it is so under inclusive. And to add the Indeed search or whatever is just way beyond the technical capabilities of the vast majority of people. It's just not at all obvious how to do it.
So
Okay,
there's
Tom-
a guy,
Tom-
there's
Tom-
a guy from Y Combinator that
Yeah.
just built a whole model and built an open source model that you can replicate. And he applied to 700 jobs and got a job.
Yeah, it's a real thing, but these are incredible
No,
outliers.
they're all
Like-
fractured, right? Everybody's got their own lane. They're
Yeah.
all fractured.
Yeah, like when I see those stories and, I found a job by doing this and blah, 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 I'm mindful of the fact that the McDonald's a block away from me, probably hired 3 people today who walked into the store and they were pointed to a QR code on the wall and told to apply through Paradox. So, it's not that the agents aren't in existence. I just think the reality is it's coming. It's not really here yet in a meaningful way. We have about a minute and a half left. Has anybody been itching to get a question answered by Andrew?
Yeah, me. Hey,
Please.
Andrew, this is Connor. I'm just curious, if I wanted to get industry specific data, like for me, I'm interested in regulatory and compliance. Can I go to your website and buy data from you, or how does this work?
Yeah, regulatory compliance, because in the report that I'll send to all of you, there's broad industry categories that you can get some data for, but I don't know if that would be satisfactory to you. That's more specialized. So how about this? I'll share in the chat my email, and then we can just take that offline if that's cool.
Okay, thank you.
Good question. Thanks. So while Andrew is sharing his contact information there, again, thank you so much, Andrew. This has been fantastic, very informative, really easy to follow. You've got a real gift for that. Next meeting, in our the godfather of programmatic recruiting, Tim Deneen, is going to be our guest. It's a month from today. It is on the 14th of May at 11 a.m. U.S. Eastern. This has been a real pleasure. Thank you, everybody, for attending, participating. Great to see some friends. And until next month, Andrew, again, thank you.
Thank you so much for having me. It's a real pleasure, Stephen. I really enjoyed this group, and it's an honor to be here.
Cheers.